What's up, you guys? It's Kyle, and what happened this week in the stock market, I think, could potentially change investing forever. That's how monumental I think everything that went down was. Now, I'm going to try to explain everything, tie it up in a nice little bow, and then give my opinion of what I think happened without all the facts coming out just yet. Now, when you find out everything that went down, what the possibilities of what happened here were, and also where I think that we have to go from here, I guarantee your mind is going to be blown. And it's also one of the reasons that I think when this channel starts getting bigger and bigger, if there's sponsors that come by, I may not be taking any of them, because you'll realize, as seeing in this video, that once you start getting into bed with certain companies, you might not be able to make decisions so much for yourself. So I think that where we have to start now is we have to first go into what Reddit is and what Wall Street bets are and explain those two things. Reddit is basically a social media platform where registered members submit content such as links, texts, posts, images that are either voted up or down by other members. Posts are then organized into subjects and user-created boards called communities or subreddits, which cover a variety of different topics such as politics, science, movies, music, cooking, etc. But what makes Reddit cool is that you can't promote yourself, and it's also mostly free from ads. So arguably one of the most famous subreddits of finance is called Wall Street Bets. And what Wall Street Bets is a group and a community that basically has their own language and their own terms about stocks. 95% of the people in there are self-proclaimed autists or degenerates, and they basically admit to knowing nothing about stocks. There's also Chads, who are guys that YOLO into stocks, and then there's also bag holders, which are the people that came in real late and they FOMO'd in at the top and then basically are holding on to stocks until they keep riding the wave down, and you don't want to be a bag holder. That's basically it. So this week, in brief, what happened was that all these people started buying call options. And in other words, they were placing bets that the stock price was going to rise. And all these hedge funds were shorting the stock. And in other words, placing bet that the stock was going to go down. Well, the problem was that every time the stock rose, these hedge funds had to buy more to cover their positions, which ended up just creating this tsunami wave circus of the stock price rising up. And see, hedge funds are a group of people that basically have so much money, and they pulled their money together with other rich people, and they have a manager which takes care of the whole thing, making more money for all these rich people. And they have so much money a lot of the times that and the inside track, that they pretty much, wherever they move their money, they can basically move markets, and they end up always winning. But this week, retail investors, guys like you and I, some could be millionaires, some could be tendies throwing their last $10 in YOLO and after stocks, robbed a bunch of billionaires. So guys, I'm Kyle, and I'm an actor, investor, real estate guy, family man. I'm making these videos for free for the good of the people, just trying to get information out there. So take a second and deposit a like on this video. That's all I ask. Also, subscribe if you have not done so already, and hit the notification bell so you will get notifications every time I post a new video. And I'm also on Instagram and Twitter, so you can find me on there. I post there pretty much daily, so you can get other aspects of my life as well. And guys, stay till the end of this video, because I'm going to dive into a lot of information here. I'm also going to give links to a lot of free crypto and a lot of free stocks and a lot of free other stuff. So stay till the end and I'll let you know about that. Okay, so typically we're taught to invest like this. 1, place most of our money into index funds or mutual funds, which basically mirror the whole stock market as a whole. 2, single stocks, maybe Apple, Amazon, blue chip stocks like that. 3, some alternative investments, such as cryptocurrency. And 4, some spec stocks, maybe pot stocks or Dogecoin or whatever that is, but things that you're just speculating on. But this week turned everything on its head, and I want to talk about that. Why AMC and GME, GameStop stock, and AMC are up over 1,000% for the year. Now, typically when companies are the stock price rises, it's because of a good quarterly earnings report or a revenue growth or something like that, but not in this case. So in this case, all these retail investors, again, remember the little guys like you and I, who got into investing heavily in this last year, basically pulled their money together to create their own hedge fund in a way. And when they started making these bets on these call options of these stock prices rising in companies like this, and all these hedge funds were shorting the company, betting that it's going to go down, it created this phenomenon where they had to keep rebuying to cover their positions while the stock was going up, and rebuying from the same people that were actually purchasing the stock for it to go up. So it created this loop that ended up having a technical glitch where the stock price just rised, creating what was called a short squeeze. So if that sounds a little bit confusing to you, because I know it did to me at first, let's talk about this in more layman's terms. Okay, so the first thing to talk about is, what is a short squeeze? A short squeeze is a term used by market participants to refer to a phenomenon where short sellers in a stock who have placed their bets on the stock's fall rush to hedge their positions or buy the stock in the event of an adverse price movement in order to cover their losses. So you see where this is going. So this creates a feedback loop where more retail traders are buying more call options to bet that the stock's going up, where these hedge funds have to reposition themselves to cover their bets. And in turn, it creates a loop where these sellers of these options are buying more options as the stock price just keeps getting higher and higher. So normally in deep liquid markets, this is manageable. However, the beauty of what happened over the last couple weeks was that retail traders, led by this Wall Street Bets crew, was able to find these stocks that had these three characteristics: high short interest, active option market, and illiquid stock. So why short selling is so risky is this: it's not for the novice investor typically. The thing is that when you're shorting a stock and you're betting for that stock to go down, you could buy it at $10. And if that stock goes up to 100, to 200, to 1,000, you eventually have to repurchase the stock at market price by the time limit that you have. So you can see how there might be no end to how much money you lose. Whereas if you're longing a stock and you're just buying a position in the stock, basically you cannot lose more than your initial investment. So what happened to me personally in this situation, and I just was caught up in the whole thing, in about Monday, I sometimes typically will reach out to my buddy who is a day trader by trade for his living, and I reached out to him to see if he was buying any stocks. He actually wrote back to me and said AMC. So I looked at it, I saw that it was on a decline for the last couple years, and it was probably one of those stocks that was, once the pandemic was going to get lifted by the vaccine, might come out of that. I don't see AMC going away, but either way, I decided to make a trade. I bought about 2,000 shares at $4, and this was probably the lowest point that it ever was at. And I think it tipped into the threes at one point, but when I bought it, it was around 4. Now that night, at market close, it went up to about 666, and I thought that was a funny number, so I put a meme out there. I just put a little Insta story, and lo and behold, that thing went to about 12 after market, and then the next morning was up around 16, and I think at market open the next day was around something $22. So I was able to finally get in to my TD account, which actually crashed at the open because there were so many people during this time trying to get in. And I ended up finally was able to sell around 1650 or so, some a little higher, some a little lower, and ended up basically quadrupling my initial investment, which was very good. But it was just funny that I got caught up in this whole thing without even thinking about exactly or knowing about exactly what Wall Street Bets is and what they were doing. Okay, so here's the thing. Since the beginning of the time, these hedge funds have had so much money that they've actually been able to pool their money together and basically move markets, which could sometimes be looked at as market manipulation, which is also not really any differently than what happened this week. However, it wasn't the rich guys getting richer, it was the retail investors getting richer. So in some cases, these hedge funds are actually able to destroy companies. And one of those techniques that they use is called a leveraged buyout. Now, a leveraged buyout is basically taking some of these companies like GME, like AMC, and basically buying all of the stock. And then in turn, taking that stock, they buy the company and all of the stock, and in turn, put the debt back onto the company. And this essentially forces the company, and they get squeezed, and they end up having to sell off things like their assets, like their real estate, like their toys, if it's Toys R Us, for example, all their assets, and any savings that happen end up getting made money for these hedge funds. Now, what happens is if these companies essentially end up going bankrupt, get this, the liability is not on the hedge funds. It's actually on the company itself. And it's just the way that these corporations are set up and the corporate laws are set up. So these hedge funds, over the last 10 years, get this, they have destroyed over 600,000 jobs because of techniques just like this. These are parents, these are people that have children that have to put money and food on the table. And this has been happening time and time again. However, this time, retail investors found a way through strength in numbers to be able to turn that and flip that on its head and do the same thing to hedge funds and screw them and have them lose money. And this is how they did it. They found companies that basically had a very high short interest. As you'll see from this diagram here, this chart shows the companies that had a very high short interest and a very low float, meaning that they had the least number of shares that were outstanding. Now you'll see from GameStop, that was the perfect candidate for what happened. They had a very, very high interest, and they actually had more high interest in the shorts than the stocks that were available for trading. Their float was so low. So you can see that they were a prime example and prime target for this. So by banding together and doing the opposite of what Wall Street was doing, they actually were able to beat them at their own game. And the best part about this is who was responsible for this. And it was Citron and Melvin Capital, who lost over $5 billion and counting in this. They actually had to be bailed out. These retail investors were able to do exactly what the hedge funds were doing and beat them at their own game. And they've been doing this for years. Now, the only difference is usually retail investors are told, oh, leave this up to these guys that are, it's too complicated for you. You just stick to buying stocks in, normal Apple and Amazon and those kind of stocks. Leave this up to them. But this time they were able to beat them at their own game. And what's even crazier about it is what happened this week, though. Because this week, TD Ameritrade, Robinhood, Schwab, platforms like this actually halted trading for these stocks. Now, me, for example, I was in AMC Monday or Tuesday, and then I was out by Wednesday, I believe. But on Friday, they actually prevented their clients, their customers, from being able to purchase these certain stocks, which just killed the momentum that these guys had going for them. So it really brings up a huge question of who was responsible for this. And these fintech companies like Robinhood, like TD Ameritrade, they're really just third-party companies. Your order goes in and gets rerouted to the company that owns the stock. And one of the main short sellers of GME was Citadel. So right now, it's anybody's guess of who really is to blame, and it will be coming out, I'm sure, more in the near future, whether it's these fintech companies or the actual institutions themselves. Either way, when you take away the ability for a certain side to participate and only give the option for the rich to make moves, that completely destroys what a free market is. Now, the public was told that it was because of their safety, because they didn't want anybody to get hurt. But the real truth is much deeper and more nuanced than that. All right, so where do we go from here? Well, I think that once the dust settles on this, it's going to be very apparent for something that I've been a big proponent of lately. And in fact, instead of a black swan event, this worked as something like a white swan event for blockchain and cryptocurrency. Now, the reason being is that I believe that we need to move towards a decentralized financial system. And what that means is a financial system that is free of human manipulation. And it takes away the whole proponent of market manipulation because of human error and human mistakes and human greed. And blockchain itself is a technology that I believe is going to change the course of not only the financial system, but a lot of other industries as well. And it's a ledger, and it keeps everyone honest, and it tracks all the transactions that has happened previously. And when you make new transactions, it tracks all of those, and it's free of a human manipulation. So this is going to be a huge year, I believe, for blockchain and cryptocurrency. You wait and see. And if you haven't done so already, don't take my advice for it. I am a big proponent and an investor of it. I'm also an investor in real estate, in stocks, in general investing as well. But this is something to look into, and I really would hope that you look into it. I'm not going to be following. I don't recommend following what Wall Street Bets is doing. However, I give them huge props to what they did this past week. I'm not going to be YOLOing into any trades that happen, but I really give them huge props for what they did and for shedding some light on the current financial situation and the current financial market and how the system is broken right now. So huge props to those guys. Guys, if that's all I have for today, thank you so much for tuning in. I really enjoyed making this video. If you have not deposited that like on this video, please go do that right now till that little baby turns blue. And also subscribe if you have not done so already, and hit the notification bell. Follow me on Instagram and Twitter. I'm on there pretty much daily, so you will get other aspects of my life as well. And guys, below, please leave a comment. I would love to hear, positive or negative, what you thought of this video. And feel free to share it if you think that other people can gain any knowledge and anything out of this video. I would please hope that you share it. Guys, thank you so much. Go down below, check out the links. There's links for COINBASE. If you have not got invested in blockchain or Bitcoin yet, you can actually go on there and use that exchange, and you will get free crypto, as well as BLOCKFI. It's a company that I invest in with my Bitcoin and actually earns up to 6% on your Bitcoin. So that's fantastic. So check those out below. Thank you so much for tuning in. Guys, have a great day.